Here's an example of a recent couple of trades using the share star system. We'll take you through this and show you exactly how we did it. The clock is wound back here. If I just go back to the weekly chart, you can see that the stock has run down quite a ways, leveled out along the bottom there, and has now begun to rise. And we'd like to get on the action, basically. So if we go back to our day chart now, we're just sitting and looking for a way to get in, and we couldn't really do that through here. There's not really much of interest in there, and then it suddenly takes off, as you can see here. Goes crazy. It's pretty hard to get in when it's rocketing up so fast as that. So we are a little bit more patient. We'll sit and watch and wait and look for a better entry. And in fact, we get that here. And now we're getting very close to what looks like an entry point. And there it is. There's the buy signal right there. And so we buy next day. So I'll mark that particular entry point there, as you can see, like that. And also we need a stop loss, of course. And so I'll put a stop loss in. And probably about that level there, I think, by the look of it. Let's just measure that and see whether that's a reasonable stop loss. Yes, it's about 9 or 10% down. That's more than enough. This is a bit too close up here, so that'll be reasonable there. Okay, so let's just move on now and see what happened. As you can see, it ran up. We're just going day by day. It's a daily chart here. We're just winding the clock forward now. And what we can see there now is that's another buy signal there now, the same pattern again. So there's the buy entry point there. So we'll enter another trade here now on the way up, just in there. And again, we'll need a stop loss for that. And so we'll put that one just there like that. That's again a bit further down this time percentage-wise. But you see, we're in a good position now because if I just measure that down, that's down about 11%. It's a bit further than we'd like. But on the other hand, we've already bought down here an initial trade, and we have that much money in the bag. That's profit that we've got. In fact, the distance up already, if I just measure that, is it's 25, 26%. We're up 26% so far on this particular trade. So there's money in the bag already. So we can now afford to give a bit back. And that's just a bit further down, but it's probably a better place to put it. So what we'll do now is we'll move this stop, of course, up to there as well. And so if the price was to come back below this line now, we'd sell, and we can't lose on the initial trade. We'd lose a bit on this trade. We still come out in front, though, overall. So we cannot lose. That's a nice place to be. Let's continue on now and see how we go. Each day, just check your chart after hours. And it only takes a few seconds each day to do that. And of course, we just, day by day, just watching it run up there now. Now, we would already have moved our stop up somewhat. And without going into details, I'd simply use a different tool like you see here. And I would use the weekly chart. And that particular line there would now be the stop loss in actual fact. So that's how we would do that. Have it just chasing it up. The fact it's running up so fast means that we need to have some other technique to trap those profits when the reversal comes. We don't want to give back too much money. And so, that's the technique we would use there. So it's running up nicely. We're just watching it now to see how it goes. And there's where it should reverse now. And it looks to be reversing and going back up again. And no, it's going down. So now we just go back to that same tool again as I suggested before. Look at our weekly chart. Yep, it's gone through there. It's closed below there. So that's our sell signal now. We need to sell that stock and get out. So we'll sell next day there, and that's the exit point there. So what we'd end up doing is we've just over doubled our money, hit 25 cents to 52 cents. That's a bit over 100% there on the first entry, and about 65%, 31 cents up to 52 cents, about 65% on the second entry, and we're out. And so that's how we would take advantage of the stock running up like that. You can see there's the weekly chart, the strong run. We took a couple of bites of it along the way, and now the risk is back and we're not there. We will not take risks. When we first bought down in here, we had our stop loss in place, you might remember, just in there. If it went the wrong way, we would jump out, and that little amount that we would lose is not really a loss in our world. That's a cost of doing business. There will be stop losses that occur from time to time for whatever reason, and we must understand that's just the cost of doing business when they occur. You can't possibly have wins like you see here without those little costs along the way. You can't possibly enjoy driving the car without putting any gas in the tank. It's no different. It's just the cost of the journey. And so what we have here is no cost at all. It went up, of course. We bought some more in here. We moved that stop up, which means we now can't lose on the initial trade, and we also can't lose overall, because even if this one gets stopped out, we've still made more money here, and we're still in front. So we're in a good position. It then runs up fast, as you can see here, quite rapidly, and we use that different tool, as I said then, to protect our gains. We use that particular line on the weekly chart there. When it closes below that line in there, that's when you sell. And we saw that occur just in there, and so we sold. And so there's exactly how you would use the share star system to make money from the share market. It is so simple. Those wavy lines you see on the chart are simply our guideposts, our channel markers, if you like. We're navigating this channel like a ship in a channel, and it's just telling us what to do, when to do it, and we just simply observe those guidelines. We know what those things mean. I can't go into that right now. Of course, that's a bit more in deep to do that. So all I can do at this particular point in time is just give you an overview of exactly how we operate the share star system. That's a really good example right there. What happened after that, by the way? Let's just have a look. This is day by day following the exit, and you can see that it's just been running down. There's been nothing in there that would interest us at all. There's no buy signals or anything in there, and so we're out. And that's an important point. We're never there for the falls, unless we're trading short, of course, which means we make money as it falls. That's a different thing altogether, though. And so we've made money on the way up, and now that it's coming back down, we're out. And it is so simple. That's exactly how we do it. We do this all day long. I'll give you some more examples as I go along, but that's a good starting point there. And you can see that's exactly what we do. And they're quite profitable trades, as you can see. They lasted several weeks, in fact months. We weren't watching this hour by hour, stuck to our screens all day long. We're not day traders. We just simply pick the entry point and have a stop loss in place and check it each day. Just takes a couple of seconds to do that, and when we get the sell signal, we sell. And that's all there is to it. See you in the next video. Hi, I'm Trevor Hurst. I hope you enjoyed the video, and if you'd like to learn more about this and perhaps learn how to do it for yourself, the next step is to click on the link below.